Welcome to ATI Pro Media live at 9 o'clock. Hope you all had a fantastic Easter weekend. What a great weekend. What a way to celebrate here the resurrection of Christ. Woke up to some sad news here this morning with the Pope passing. So tough day on that end. But we'll see what unfolds here for the rest of the week in your grain and livestock markets. Let's jump on over and check out where they are at now, and we'll roll through your headlines. May corn's up 1 1/4 at 483.5. New crop D's corn is down 1/4 cent at 465 3/4. May beans are down 2 3/4 at 1033 3/4. New crop beans down 4 cents, 1028. Oil is a little bit weaker. Soy meal is 70 cents weaker at 302.40. Chicago wheat is down 4 cents, and KC wheat May is down 3 cents, and new crop July down 1 3/4 at 568 on July KC wheat. Looking over in your meat markets, cattle market, feeder cattle are $1.50 weaker. Your May is down 65 points at 286.20. Your August is down $1.50 at 289.37.5. Looking over at live cattle, we got April fats down 30 points at 209.52. In your lean hog market, we are firmer. We got some green on the screen there, up 70 cents. May hogs are 91.10. June hogs are 98.82, up 80 cents. Your energy markets, we got the crude down $2 a barrel, 62.62. Diesel's down almost 5 cents at 210. Nat gas is 11 cents weaker at 313. The Dow is 695 points off, lower at 38,640. The S&P is 100 weaker. The NASDAQ 420 weaker at 17,952. Volatility in your equity markets. The Russell also weaker. Bitcoin's up 2,000 to 87,310. Gold's 100 points firmer at 3,409. New record high on gold market. Silver market is up 35 cents at 32.83. Dollar is weaker. Dollar's just getting crushed and down $1.13 at 97.995, breaking that 3-year low that we've set recently, breaking new lows there on the dollar front. Cotton's a little weaker as well. So grain markets, they started the overnight session with some green on the screen. We had KC wheat market up, we had corn up, but have since given up some of those gains. We got old crop corn hanging in there, still up a penny, but new crop has given some back, and wheat market's under a little pressure here out of the gate. So I thought we were going to have a little higher market with the weaker U.S. dollar supporting things and some weather risk premium coming into this market with too wet and maybe a little too dry down the road on the longer term forecast. But we're giving away some of that here out of the gate here. So, one of the biggest headlines here this morning from a macro market perspective is the awakening here Monday morning to news that Pope Francis had passed here Monday morning. So he'll be remembered for many things, but mostly probably as a progressive leader within the church and breaking some of the traditional stigmas and teachings of some of the church there. We'll see how things progress going forward, but certainly more in the passing of Pope Francis here out of the gate after Easter weekend. So hopefully you all had a great Easter weekend, and the weather was decent for you. I know some areas got some rain across the Corn Belt. Producer Rick was telling me it was a little wet in Illinois over the weekend, but the weather wasn't as bad, maybe as anticipated. I know we woke up pretty chilly on Saturday morning for some weekend baseball, and there were lots of blankets and lots of hoodies out there to stay warm. And then on Sunday, was kind of a similar pattern, but the sun broke loose, and we ended up a great afternoon on Sunday celebrating Easter. But U.S. dollar, that's another big headline here today, breaking to recent lows, fresh 3-year lows. I think, the Trump comments with removing or discontent with Jerome Powell is pressuring that a little bit on the U.S. dollar. Remember that the U.S. dollar is heavily weighted against the euro. Look at those, how the U.S. dollar compares against the Mexican peso, the Brazilian real, Japanese yen, some of those other currencies as well to watch that trade. It's not just about the dollar and the euro, but when you look at the dollar-euro index, remember that it's very heavily weighted on that dollar's relationship with the euro there. So crop progress, though, and weather, that's what we're moving on to here now. So crop progress, we will get updated planting progress here out this afternoon. The 5-year average corn planting pace is about 10%. So I think we were at 4% last week. So will we catch up here? How much progress was made last week? I think a pretty wide open. Wide open. A lot of planters were running from reports out there. It'll be interesting to see what got printed. Last year we were 11% planted as of April 20th. So we'll see what number we get today. Bean planting average is about 5%. Last year was 7%. We'll also be looking to see what we get for numbers on our crop progress planting pace. An important number as kind of wet near term here going forward, and maybe parking the planters in the field for a little bit here until we get deeper down the road. But all eyes will be on that planting progress, and as well as weather models going forward too. So looking at some weather here near term, here's the snapshot of the 7-day WPEC outlook. And I can't help but be happy because there is a lot of color up in my area, southwest corner of Kansas. We got some chances of decent moisture there, and we need it, guys. So lots of areas in that map that need some of that moisture. That could be at least, relieving some drought. I don't know if it's a complete drought buster, but moisture breeds more moisture, and we hope that that's the start of priming the pump for deeper things to come and more things to come out here. We'll take it in the West for sure. So a lot of color on that map, broad area. I think anything blue is, 3/4 of an inch or an inch of precip. A lot of area going to get an inch or more rainfall over the coming 7 days. So we'll see what that brings. But when we look out at longer term forecasts, so we've got a battle here right now. Near term, wet outlook, planting delays. And we had on Thursday, we had a release of a 3-month outlook. This highlights July, August, September. This is a look at the midpoint for the forecast on the extended long range forecast. It's an anomaly of the mid value compared to the 91 to 2020 average. Guys, these long term forecasts, you got to take them with a huge grain of salt. But they're great for social media sensationalism. They're great for headlines. They make you think. They help you pump the brakes on your marketing. If you don't want to sell your crop, here's an excuse not to, because you're not going to have it. But take this map with a huge grain of salt. I'll believe it when I see it. You guys are good at raising corn, and I don't know. We can have a drought, but those pretty pictures out there, they make a good pretty picture, and they blow up on social media and create that sensationalism and headlines. But be careful how that graphic and that perception of drought or moisture, that headline, skews your bias and skews your marketing plan and the decisions you make out there. So be careful with that. Had some fund positioning. COT data came out last week, Friday. Sleep River, Good Friday. We had COT data out. Also had a cattle on feed report Thursday. We'll get to that here in a second, Rick. But the commitment of traders data, funds bought a sizable amount of corn. They bought 71,000 corn futures in that period. Now they are net long 125,000 corn. They had liquidated that long position. They've sold it off. They've bounced back, and they've got some length on now. Funds also bought beans. They bought 77,000 beans. They're now 26,000 net long. So they flipped from net short to net long with that bean position. Interesting to see what they do. When the funds are long, it's a great time to be offsetting risk, but it's also a great time to be trying to ride that bull market too. So talking out of both sides of my mouth there. But you get into this time frame, and funds like to own it when the farmers are planting it, and they like to have it sold when the farmers are selling it, typically in the fall, and buying back that position. So interesting to see where it will, how it all will shake out going down the road. But that's a snapshot of where your funds are at, and they'll move the market going forward with a lot of things happening. Had that cattle on feed report. Now let's pull that headline in. Cattle on feed report on Thursday. I'm going to call it somewhat bearish, slightly bearish. Pop in those estimates here for you real quick. Looking at that, we got on feed number 98.4% was the print versus 98.3 was the average of estimates. So coming within range there, but that placement number, 5.1% more than a year ago. The trade was looking for 3.7, probably having a lot to do with weighing on your futures markets today, as August feeders are down $2 as we speak right now. Marketings came in above that average estimate, which is good to see, but maybe not enough to offset that placements there. Some notables when we look at the cattle on feed report and estimates, imports from Mexico are increasing, but they're still below year-ago levels. So we're starting to see some more Mexican feeder cattle imported into the U.S. Nebraska and Colorado have more on feed than a year ago, while Texas and Kansas have fewer numbers of on feed versus a year ago. Some regional discrepancies there. Rewind the clock 2 years ago, and we had a sizable north-south spread on your cash trade out there. And I think a lot of people reacted to that and maybe placed some more cattle or shifted those cattle into those northern areas to try to benefit from that. Things can kind of even out over time, so maybe not quite as big of a spread that we've seen in the past, likely due to the on-feed numbers out there. We also get in that cattle on feed report, we get a quarterly heifer and steer mix. So that's a big one to be looking at as we look at, are we rebuilding the herd? Are we holding back heifers? And we're starting to see a little bit of clues that we are holding back heifers. But this number printed in the cattle on feed quarterly mix is so behind the ball on what's actually been kept out there that it's difficult to judge off of it. But 37.6% is the mix. That's well off we had 32% of the on-feed numbers were actually heifers in the 2014, 2015 timeframes. So we're not quite at those levels on our steer heifer mix in the feed yard, but we're getting close to that. We've seen a pullback there, and we're starting to see indications that maybe they're keeping heifers back for retention and rebuilding the herd. But cow slaughter, some of these cows are going to have to go to town, and is it enough to offset the amount of cows that are going to have to go to town over the coming year? And what's the precip like going to be like in the northern high plains out there that's faced some drought? Green grass, if we have green grass out in those pastures, I think producers will be more apt to keep more numbers back. But one thing that really helps guys keep numbers back is the values that their calf crop is bringing. When you can go sell the steers and pay your bills, that is huge to be enabling you to keep back more heifers and incentivize you to grow your herd for down the road going forward. So in the cattle side of things, though, going forward, all eyes are going to be on the marketing pace, slaughter pace, eyes going to be on the cutout and what the beef cutout does. Also those macro market headlines, the consumer sentiment side of the business, and remind you that it's always bullish at the top. So when sentiment gets really bullish, when the headlines and the fundamentals all feel bullish, the markets typically try to price that in, and then things can run out of gas, and it's more bearish than it is bullish, and the market continues to slide lower, and it's always bullish at the top, guys. So I love a bull market, want to be bullish beef, but be careful with your bias going forward. LRP is a great tool. Run that LRP commercial real quick as we wrap up the beef cattle segment here. But we had the cutout 331 on Friday. Also got that print. We were $1.38 lower on Friday, 270 below a week ago. Cash is called steady for the week after finishing last week 4 to 7 higher, bouncing back. Expect to see some volatility in your cash markets as your packers bounce slaughter place, box beef, consumer demand. It's hand to mouth out there. LRP is a great product to manage your risk, button up your risk before you have to. Buy LRP, buy puts before you need them, not when you need them after the market breaks. So, all right. Did a premium content deal last week, an update, a refresher on where we are at with corn and soybean marketing recommendations, target orders, walk through charts and specific target orders that have filled or will be filled if we get rallies to certain levels. It's important this time of year to make sure you got orders working out there so that your marketing plan can work while you're out in the field, busy with the planter, busy getting the crop in, busy making the most bushels that you can make. But don't forget to button up your marketing here. So we blasted that video out with some specific recs. If you're interested in premium content, go to atipromedia.com. You can sign up $30 a month, $1 a day. It's a great value. We're putting out great content. You get an email every morning, what's going on in your markets. You get actionable text alerts when things happen in your markets, when there's time to take action within your marketing plan. And then you get these videos where we break down and walk you through, focusing on education, how you can manage the market, how you can manage volatility, and try to put you in a position where you're not a victim going down the road. We don't want to be victims of a market that catches you off guard down the road. We can all blame it on something that was unexpected. Nobody saw that coming. It was looking like this, but then we got a left hook out of nowhere. So do you have a plan for when you get punched in the mouth? That's what you got to worry about. Dr. Cruz, he was on Thursday. So thankful to have him jumping in. Him and his wife had I think it's their third kid on Friday. So Dr. Cruz doing ATI Pro Media Premium Thursday morning and pumping out babies the next day. So congratulations to the Cruz family. Hope all's well there and enjoy some time off and that special family time right after having a baby. So if you missed that episode, go back and rewatch it. It's on our YouTube channel. You can check that out. You like and subscribe our YouTube channel and go back and watch some of that content. Last week we had Dr. Cruz on Thursday and we had Tony Dunker on Tuesday. Go back and rewatch those episodes. They talked about some great things out there, and it's a great time if you're running around in the tractor to put that speaker on and listen to it while you're getting the crop in the ground. So tomorrow I'll have Tony Dunker on as well. She'll be covering for me, and I think on Friday she's going to cover for me as well too. It's cow breeding time. We're breeding cows, syncing up our cows, pulling cedars tomorrow. We'll be breeding them Friday, and then next Friday, May 2nd, we're going to be putting embryos in, and hopefully we're going to be doing it all in the mud out here in western Kansas. So with that, appreciate y'all joining us. That's kind of it for your markets here today. We got corn trying to hang on. All eyes will be on the crop progress here this afternoon. We got weekly export inspections, shipments data that'll come out here in a few minutes, actually. Then updated weather models, where it's what's actually happening today. And we're always looking out to see what the weather's going to be like 7 days from now, 10 days from now, and even months from now. But be careful. The information you consume right now today, how is it impacting the marketing decisions you're making today, tomorrow, and going forward? Don't let complacency ruin your day, ruin your month, and ruin your marketing year. So stay on top of your game here, folks. With that, I'm out of here. Have a great day. We'll see you tomorrow.